Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for June 26, 2022. You know, we had a big rally at the end of the week last week, and I'm going to show you some charts that will probably give us some indications whether that's going to continue or reverse. So we're going to talk about that here in a minute. But before I get into that, I just want to say if you haven't tried out Forex Analytics, well, you should try it out. It's $1 for 10 days. You get to download the mobile app while you're trying it out. And even if you decide to keep the light version, which is only $19 a month, you still get to try the premium version for the first 10 days. So make sure you jump in our chat rooms. We probably have one of the most robust trading communities out there. Download the mobile app so you have all the analysis, all the updates. You know, every time there's new charts or change in analysis or maybe a pattern in play suggesting that the market may move, you get those for the first 10 days, so try it out. Now, I want to go into those charts, but I got to say this. The markets are recovering, and what we've seen is we've seen the dollar kind of stationary this last week, but I think the dollar is actually brewing for a breakout or breakdown. You can see this triangle pattern that's developing in the dollar index. But if the stock market is going to continue, that would probably suggest the rally in the stock market, if that's going to continue, that would suggest that the dollar index probably is going to continue to pull back a little bit. And you'll notice we're at the 38% retracement of the last leg higher, but you can see that tight consolidation. Nice triangle setting up for a possible breakout, and that's probably going to be heading into this next week. But let's talk about the equity markets, and let's start with the S&P and say, well, you know, the S&P, you guys have seen this chart 1,000 times. We have the big head and shoulder pattern. Ultimately, I think the market's moving lower over time. You can see actually the head and shoulder, you know, the head and shoulder pattern really targets towards 3,500. You know, you can see it 3,300 on this neckline. It depends how you want to draw your neckline. Some of you might have it, you know, drawn something like this. You know, might be a little cockeyed. You know, we call it a complex head and shoulder pattern. However you decide to do it and you want to draw it out, it's solely up to you. The targets are actually lower than where we're at right now, but that doesn't mean we can't have these sharp bear market rallies, short squeezes accompanying, you know, this ultimate bear market lower. And I think that's what we're seeing right now. So when you look at the S&P and you go, well, you know, we are seeing a rally back. Notice that we had a throw over. That is, well, actually in this case, it would be a throw under, where you break through a channel and then you reverse going the other direction. That usually suggests that you might, you know, hit the upper end of this channel, which would be towards the 200-day moving average. Now, whether we can make it all the way to the 200-day moving average, I think there's a lot that has to take place in order for that to happen. But it's not just the S&P moving. Take a look at the Dow. I know we mentioned this last week, but the Dow was hitting a 38% retracement. And you can see this is the post-COVID lockdown lows, rally. We stopped at the 38% retracement. We've bounced pretty aggressively from that. So that suggests that the Dow might have some further upside. If you look at the Nasdaq also, you know, has rallied sharply after exceeding 161% extension of the last major rally that we've seen in this downtrend. So, you know, is there more upside, you know, to this market? Well, I think there possibly is. Now, it's not just the U.S. equity markets that you got to be focused on. I want to take you to a couple other markets that I think are very, very important. Let's take a look at the emerging market index. This is the EEM. Now, what you'll notice with the EEM is we stop making lower lows, and you can see we've actually made higher lows. Now, a lot of us in the currency markets, we tend to trade emerging market currencies like the Mexican peso or the South African rand. Those are making substantial gains as well. So that actually tells us or suggests to us that this rally in the emerging market index could actually continue to rally, you know, could continue to build. Now, notice that you see a 618 retracement. That is a long-term. Go to the weekly chart. That's the post-COVID lockdown. Then the rally, you know, that happened after that. That was a beyond 100 or 618% retracement. But, you know, we've obviously forged out some lows here. You know, a rally back towards these highs at 43 is entirely possible. Then you take a look at the Chinese markets. Take a look at the F.A.C.E. Now, this is a weekly chart. Take a look at this long-term channel, right? That long-term channel is, you know, from 2008, you know, that's following the financial crisis, if you take the highs, match it up to those lows, you got a big channel developing in the Chinese markets, and we've actually held up. We didn't make new lows, and this is a weekly chart, and you can see that the daily chart is about ready to break out. So when you're looking at the S&P and you're like, well, can the S&P really build on these gains? Or, the U.S. equity markets, take a look at other markets as well. You got, like I said, you got emerging market currencies or emerging market indexes that look pretty good. The F.A.C.E, the Chinese markets tend to look pretty good. And then also take a look at like the Japanese yen, which is one of those currencies that as stocks continue to rally, the yen may continue to weaken, and the yen still has some downside. I'm looking at this this daily chart, and we have a bear flag that hasn't quite completed, so we might continue to see some yen weakness that would also complement equity market rallies. That means the dollar yen may have further to go. We might continue to trade up towards 140 in the dollar yen. But let's take a real quick look at the dollar and what's happening with other currencies out there. Let's take a look at the euro. Excuse me, I had something in my on my tongue. You'll notice the euro hasn't had a lot of change from last week. We're still building this wedge, but we've got to watch this descending trend line that comes in roughly around 106, 106.10. We start breaking. Well, actually, it's 106.20 because 106.20. If you'll notice here from the highs right here at the end of May to the lows this month. The 618 retracement comes in at 106.20. So if we can break above that 106.20 in the euro, that would suggest that maybe a double bottom is developing. You can see these lows here. But first we have to break above 108. And above 108, then we're targeting at least the 200-day moving average, or maybe even as much as 112 on a break higher in the euro dollar. But it's not just the euro as well. Take a look at the Aussie. The Aussie's trying to form some lower highs here. Kiwi also had that false breakdown. Now we're creating higher. Did I say lower highs? I meant higher lows. It's the weekend. Excuse me. But also, like, going back to the emerging market currencies like the dollar MEX. Look at it. You can see that emerging market currency strength as we've reversed. This is actually from a. Let me just show you really quick. That was from a 618 retracement, right? Big reversal there at the 2070 level. Looks like we might come back down and trade towards 1950 again. That's following Banxico actually raising rates by 75 basis points this week as well. Now, a few things that are happening this next week that we should pay attention to. Next week, we have the G7 meetings. We're going to have durable goods orders. We're going to have U.S. pending home sales this next week. And that's going to be fairly important to watch because the housing market has come to a screeching halt after the Fed has aggressively raised rates. So as mortgage rates have soared higher over the last 60 days or so, it's really put the brakes on home sales. So seeing what pending home sales numbers are at on Monday is going to be pretty important. We got U.S. consumer confidence. How's consumer confidence holding up with the very high elevated inflationary pressures that we're feeling? We have ECB President Lagarde. She is speaking. Fed Chairman Powell is speaking this next week. Bank of England Governor Bailey is also speaking. And we will have PCE, which is the Fed's favorite inflation data, coming out on Thursday. And then we're going to have ISM data actually on the 1st. We're not going to have jobs reports this Friday. We'll have them the following week after the 4th of July holiday. So it's going to be in about 2 weeks' time. We're going to have the jobs report, but we will get ISM manufacturing data at the end of next week. So it should be a very exciting week next week. And like I said, I think the market is poised to see a rally, but you got to watch, all the indexes that I showed you. Also keep an eye on Bitcoin. Bitcoin, continues to forge out some lows here, and Bitcoin is at risk, I think, of a move back towards 25,000. And if that's the case, that's going to support risk assets moving higher as well. So just watch Bitcoin, especially, some of these cryptos, they've been beat up so bad, you might get a little dead cat bounce in some of those markets as well. And if you like this video, make sure you give us a thumbs up. And also, if you haven't checked out the Trader Funding Program, make sure you do so. This is the way you can trade our money. You don't have to trade your own money, and you can keep 75% of the profits. All you have to do is pass an assessment. With that assessment, you have to make 10% in a demo trading or a paper trading environment without losing more than 5% trailing drawdown. So make sure you check that out. Also, there's a video at the very bottom of the Trader Funding Program website, and that 2-minute video will give you a good explanation on how the program works. It's very popular. We have traders that access live trading accounts each and every week since we've launched this program. So let's see if it's right for you. All right, my name is Blake Morrow. Thanks for listening and spending your time with me this week. I'll see you on the F.A.C.E show Monday morning. See you there. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.